Yeah, let me tell you about ugly Aunt Irma.
Oh, okay.
Okay, so the IRMA it's IRMAA, the income related monthly adjustment amount for your Medicare Part B and your Part D premiums. So let's use an example, one that you just pointed to a moment ago, where you might see the cost of your Medicare jump up on a month-to-month basis, but you could be stuck with an IRMA penalty for as long as a year or two. So the Office of Social Security and Medicare comes out every year with a table that you can look up and see where you land, and it will tell you how much you're going to pay for your Medicare premiums. So for 2025, if your modified adjusted gross income is $212,000 or less, this is for a married couple,
Okay.
you're going to pay the base rate for your Medicare Part B and your Part D premiums.
So the
That's good
185.
news. Right.
Okay.
So going back to this MAGI figure, what does that really mean? It's a pretty easy way to calculate it. If you look at your last year's tax return and find your adjusted gross income, it'll be on your Form 1040, and usually it just says it with bold letters.
Yeah.
And then on that same 1040, there's going to be a line that says, non-taxable income. It's going to be income from like a municipal bond where that interest isn't getting taxed. Well, you got to add that non-taxable interest back to your adjusted gross income, and then you get MAGI.
Whoa, wait. So you're saying the non-taxable interest on my municipal bonds caused me to pay more for Medicare?
Yeah. That kind of sounds like a tax.
It does kind of sound like a tax. And actually, unfortunately, the same thing counts for Social Security. Your tax-free interest on municipal bonds factors in to the taxation of Social Security.
Ooh, not so tax-free anymore.
So even though you didn't pay tax on the interest, it can cause you to pay tax on your monthly benefit.
Yikes. Okay.
Not great.
So taking a look back at this table, if you've found it online, if you're a married couple on Medicare, and let's say your MAGI is above 212,000, well, you're going to be paying more. That's the first area, the first bracket, or sometimes it's called a cliff. If you fall over into the next IRMA cliff, that will trigger more cost for your Part B and Part D premiums. And it can add up to $100 a month or way more in some cases.